we have a trade on here. So what I'm doing, I'm shorting below this bear bar. I'm trying to go for 5 points. So market shot down here, but then it pulled back. So that kind of spooked me out there for a little bit. The reason we're taking this short is because after the open here, we attempted to go higher once, higher twice, and we also got this bull bar that was trying to go higher. And then each of those attempts failed. They failed at the moving average. Now we get a good looking bear bar below the moving average. So that's looking like a good area for a short. Another reason I like it is that we have room down to these lows. So when I'm taking these trades where I go for 5 points, I like to risk about 4 or 5 points, and I'll go for a profit of 5 points. And it's better that I have room to be able to get out at these lows. So we'll have to let this trade play out. As long as it closes below its midpoint, and we got a few more seconds left. As long as it closes below its midpoint, then I'll try to let it ride down here. It's low enough now. It's far enough down here now that we could probably, like, even if there's a pullback bar, we'd be able to at least get out break even. So this is a much more comfortable spot to be in than when it was up here. We've had 5 bars down that were below the previous bar. So this high was below this high, and all of these highs were below this high. So with today being a trading range day, it also looks like the first time we go above a bar, it'll probably be sold. So scalpers will probably sell above the high of a bar. So today is a trading range day so far. We can see what are the signs of a trading range. Tails below bars and above bars. We see overlapping bars, right? So all of these bars are basically occupying the same price. They're all around 57.80. And we also have bad follow through. So each of these bars reversed immediately. You have trying to break out here and it failed. You have a big bull bar, but instead of getting a second bar, we get a bear bar immediately falling through. Trying to break out up here, and then immediately get a bear bar and then bad follow through. So that's signs of a trading range. Another sign of a trading range is that we opened within yesterday's final leg. So we can see this is the final leg of yesterday, and we opened right in the middle of that. So we just need a couple more points for it to get down here. It should be able to get down here. We have this head and shoulders top that I was talking about. Bears tried multiple times, and bulls tried multiple times to go up, and were unable to, and then got a good looking bear bar right below the moving average. Now, I'm going for 5 points here. Your question might be, well, could you go for more of a swing? So you'd go for 10 points or something down here or even down here. So if the context was different, I think you could. But the context that I'm seeing is that it's a trading range. So those big swings are less likely to happen. We're more likely to see buyers below this bar at the 200 moving average, and as it gets down, the market will remember that this was a good price and it shouldn't spend too long below this. And really, that'd be the same thing on the way up. If it's getting up here, well, look, this was the correct price for most of the morning. So it'll kind of test up, and then if it doesn't find a good price up there, then it'll come right back down into this range. So I think basically if this is the bull bar, I'll go ahead and just get out at the close of the bar.
Order filled.
So got a couple ticks there. Trading range price action. So we're not going to be getting, great moves that just immediately come down all the way. You can see, this move up, you got to sit through all these big tails through here. Now, what we should be able to do is to sell a limit order.
Order
here.
submitted.
So we'll try to sell here and go for a couple points. Like I was saying, we've had several bars where the high was below the previous high. And then so this bar here, there should be sellers above this bar, then sellers higher at the moving average. And you notice I dropped my position size down to, all right. So it looks like it touched my limit order, and then I was only going to go for 2 points there. So missed out on that trade. But you notice I dropped my size down to just 1 contract instead of 5. And
order canceled.
that's because when you're doing the more scalping, you want to have a much smaller position size, like 20% or less, so that you're able to be flexible and scale in as needed. I want to speak more to the idea of a trading range. This is the daily chart. Price is here, and look to the left. The last 2 weeks have been a larger trading range. Trading range with the high up here and the low 100 points lower down here. And we're right in the middle of that trading range. Now, there are going to still be big swings in this. For example, swings to come down and test this low, right? That's an important low there, and come up to test the high. So there could be big swings, but we're within a larger trading range. As prices get higher up in the range, they'll find more sellers above bars, like above yesterday's high or above this bear bar. As they get lower, they'll find buyers, like below the bar and at the moving average. So here, I'm looking to buy below the low of the day. And this is 5 micros. So I went down to even smaller of a position. So the trading range is continuing. found buyers near the lows. We expect to find sellers near the highs.
Order submitted.
Put my limit order in right above that bar. So you can see, right, starting to get a strong move down, and then it got bought. Starting to get a strong move up. We expect that it would be sold. When you start to see the tails on the bottoms of bars, tails on the tops, bad follow through, lots of overlapping bars, and with the added context that we're within a larger trading range, within yesterday's range, yesterday's final leg, then we can be expecting a trading range day. I mean, this is the correct price. The market opened here, and anytime the market tries to get away from that, there's more buyers than sellers. Anytime it tries to get above, there's more sellers than buyers. And that's what is causing this trading range. So we'll let it play out here and see if we can get our order in. So just as I'm interested in selling above bars, I'm also interested in buying below bars.
Order submitted.
So basically I'm kind of playing this area here, and got to keep bouncing my orders back and forth. So I wouldn't want to move my order up any higher to buy below a bar up here, because that would be buying too high in the trading range. I really want to be buying in the lower half, the lower third of the trading range. I don't want to buy up here and then end up having to hold all the way down here. So I'd rather buy in the bottom half of the day. Like if this comes to be a good bull bar, I think it's good that the moving average is right there, and we get that tail on the bottom. For me though, I'd rather wait. I'd rather only be buying in the lower half of the day. So ultimately, if you did buy below that bar, you would have been able to get out for 2 points. So that scalp would have worked. However, I just don't think the math is as good as the same setup that would be lower in the range. So that's why I like avoiding that trade. Basically, I'm waiting for either side to play out here. So like I will sell above here if it gets up here, and I am willing to buy here because it's at the open, and scaling lower as needed. So I'm basically just waiting for market to go in one direction far enough. So we're getting close to this limit order now. I'm pretty sure that it will get filled here. I can see that the market would want to come down a little bit more. So the market really, it can do, there's really only two types of days. One is the trend day, which really is the best kind of day. It doesn't have to be the whole day either. There can be trends within a trading range. Looking at this day, this is a trend day. Tried to go up several times and failed, and then the rest of the day it's spent going down. Once you identify trends, well, the open was a trading range, but then it converted ultimately into a trend. There are better examples in this. Some days basically just go all day in one direction. But, right, some days are trends, and other days are trading ranges. Now, how if you let's just do a thought experiment. If you know the day is going to be a a trend, let's say you know let's say it's going to be a bull trend. Well, what are you going to do? You'd only be buying. You'd only be taking longs. You might take a long on the first bar and then hold it for the rest of the day because you know it's going to be a bull trend. And if I told you that the day is going to be a trading range, well, how would you trade that? Well, you'd basically buy any bear close and buy more lower. You'd buy below bars. You'd sell above bars. You'd sell bull closes, and you would make money the entire day doing that. So, how can you get better at trading? Well, a big thing is being able to recognize if it's going to be a trend day or a trading range. So that should tell you where you should be placing your study is on studying on how to identify. So okay, we got a bear bar there, so I don't want to be buying right below a bear bar. So I'm just gonna move it down there because I don't want to be, there's gonna be some bulls getting out below that bear bar, so I don't want to be buying directly below a bear bar like that. But where you should spend your time studying is trying to recognize, is today going to be a trend day or a trading range day? And there's the signs like I was talking about here, right? We can look at yesterday was a trading range day. It makes today more likely to be a trading range day, especially if we open up inside of the range. Then if we've had a trending market, I'll pull up the daily chart. If you're getting bars like this, like big gaps, big bull bars close near their highs, the market's probably going higher. And you can see there's little tails on the bottoms of these bars. A little tail here, here, here. Kind of a bigger tail there, but it wasn't coming back to the it was coming back to the moving average, and then a little tail there. So you can see in a bull market, there's little tails on the bottoms of bars. So when it opens, it goes down a little bit, and then it starts moving up. So we see the market's moving up, and we want to look for the market to go down a little bit, and then we can start taking longs. And we want to be swinging in the direction of the trend. Versus if we're getting sideways bars like here, here. I mean, these are large bars, but that's still sideways. And then, or here, then, we know we're in more of a trading range market, and we can do less swing trading and more scalping, just getting in and out. So I'm gonna go ahead and pause the video again, and I just think that's where you should direct your studying. Is that if I can say with some confidence that today is going to be a certain type of day, then I know how to trade it, and I can go in with a plan on how to make money from it. So bears were able to make money selling above this bear bar. And look where the market is right now. It's basically right around the open of the day. If I draw a line in here at the open, look how much time it's spent around this open. It's not just spending time around it; it is reacting to it. When we got below it here, this tail came back and tested it there, and this bull bar came up and it closed right around the open. We were up here, the tails came down, tested it. Now we're coming back and testing it again here. When you see that, the open usually is an important price the rest of the day. So that's another thing you can watch out for, is that if you're getting later in the day and then you're down here and you're getting a good bull bar, if you're short, that's probably a good place to get out, because there's probably going to be buyers trying to buy it back up to the open. And then if you're neutral, that might be a good spot to take a buy and try try to get that move back up to the open. So I moved my limit order to sell above this bar. Why? Well, it's a bad looking bull bar. You know, how many people are really going to be buying above that at the moving average? Probably not too many, too eager to be buying above that. Same with this bear bar. If the bear bar closes something like this, I'll go ahead and move my order down to sell above that. That'd probably be a good short. And if it keeps going down, I will look to buy somewhere down here, probably below this low. So that's a good looking bear bar. And now we're getting to the point where we've had several bars where the high is below the previous high. So a good looking bear bar, and there's not going to be too many bulls buying above that. And it's also at the moving average in a trading range after we've had several bars with lower highs. So that should be a good short to take there. So bears are making this move down, and now I have an order to buy down here, betting that a breakout attempt will fail. We're also getting close to this 200 moving average, so that should act as some support. We're getting a similar situation where these highs are all below the previous high. That was similar to through here, where the buyers were able to make a scalp there. They'd probably be able to make a scalp here as well. I just don't prefer to be selling in the bottom of the range. But if we're able to get a few more ticks, we can get into this long here.
Order filled.
So there we go. So I'm doing 5 micro contracts. And I just want to go for 2 points there. So trading range day, bulls trying to break out, they fail. Bears trying to break out here, they fail. Bulls fail. Bears appear to be failing. And this is what you get on trading range days. It always looks like it's going to be, the breakout always looks like it always looks like it's going to work. And then, the breakouts are actually more likely to fail. So as long as you're correctly reading that it's a trading range, then you can bet on the breakouts to fail. But that's the key, is that you need to be sure that you're really are in a trading range, and you need to be sure that you're trading small. Also, look how important that 200 moving average is. You can basically pull up any, you can go back and look at any day, and if it's getting around that moving average, it reacts to it. It doesn't always stop on a dime right at the moving average there, but it's going to act as support. It's going to like play around to the moving average. It's an important level. Look at this chart here on the 200. Tested it. More here, and touched it twice exactly there. Then it acted as support here and here. And now it's acting as support again. So I don't so much see the 200 moving average as, at least for me, I don't enter trades based on the moving average, but I can let it act as confluence. And if I can recognize that it would act as support. So let's just say, for example, I was short through here, then I'd want to be gating out around that 200 moving average because I know there'd be buyers around there. So I'm trying to scalp for 2 points. If the range, today's range has been, let's see, the high is 88, and so far the low is 74. So
Target filled.
okay, so we got filled there. So the range has only been 14 points. So it's a fairly tight range. Recently ranges have been more like 50 points. Like yesterday was 54 points or so. Now, if I was trying to scalp on a range like this, I'd want to go for more like 5 points. But with a range of this size, then I'm going, for less of a profit, more like 2 points. I wouldn't want to scalp for anything less than 2 points. If you're just going for 1 point, your commissions are really starting to eat into that $50 profit, and it'll be difficult for you to win enough to make it be profitable. If you're only going for 1 point, and you have to risk 10 or 15 points and scale in, you will win that a lot of the time, but it's your win rate has to be greater than 90%, and you're gonna win a lot. You're gonna win a lot of times in a row, but then the one time you lose, it's gonna be a large loss, and it's really gonna be, you say, oh well, I've just wiped out 2 or 3 days of or more of my trading. So that's why at a minimum I go for 2 points, and if the range is larger, then I go for more. So trading range, breakouts fail. Looks like it was going to break out there. It didn't. In a trading range, it's better to bet that breakouts will fail because most of the time they do fail. 80% of the time they fail. All these tests lower, these are all attempts to break out that are failing. And earlier in the video I was talking about how here, normally after something like this, you'd expect a second leg up. But we were trading range, so I was talking about how we probably wouldn't get much of a second leg up after that. So I'm going to pause the video and wait for our next setup. Another thing you need to be keeping in mind throughout your day is the scheduled news events. So sometimes leading up to an important news event, like an FOMC announcement, you'll have a range like this where it'll be fairly tight. The market really doesn't move much in one direction. And of course, you can still trade it as such. But as you're getting to that 2 o'clock announcement, for example, you don't want to be holding any positions going into that. So sure, on a day like this, you can say, all right, we're getting trading range price action. Guy says that I can buy below things, trade small, bet that breakouts will fail, and I can take these trades all day long like this. You do want to keep in mind the possible news events. So I always check Forex Factory at the start of the day, and I look for red flag events. So all of these are yellow or orange, so they're really not important. These are not going to move the market. At least they're not going to move the S&P. We'll go down to Wednesday. So Wednesday FOMC, 2 o'clock. That's a red flag event. So that's going to be a market mover. So I don't want to be holding any positions going into that. and any setups I might see before then, I need to judge like, well, this probably play out before this starts. And if you are in a position leading up to this, something like a FOMC announcement, then you need to get out. So at least a couple minutes before the announcement, you need to be getting out of that trade, because otherwise, market could move 50 points in a couple minutes, and you just don't want to be holding on to that. Really, the FOMC from between like 9:30 and 4 o'clock, the normal trading Eastern time trading hours, the United States trading hours. Really, the FOMC is the main event that would happen. So like at 8:30, we have a lot of at 8:30. There's a lot of reports that come out. Often 10 o'clock, there'll be some reports as well. So and sometimes 11 as well. Normally 10 o'clock is an important time for some news. So be checking the forex, be checking your news events beforehand to make sure that you're not in any trades when those news events go off. So I went ahead and put up our profit for the day. So I'll go ahead and have that up. So that's the combination of the two trades, the short here, and then the long below the low of the day. So I have the open of the day drawn in, and it continues to be an important price, right? Like the market tries to get away from the area, then it can't. The bulls overwhelm the bears, and it buys back up, and it comes back up to the open of the day. It comes back up to the moving average. And
order submitted.
I will be placing an order to buy there again if we can get below there. So our limit order is getting touched.
Order filled.
Got filled there. Put my stop down here. And I'm going to go for 2 points. So the range is small today, and I can feel comfortable buying more lower down here as needed. It's better to be able to buy above a bull bar. So I'm gonna go ahead and pause the video, and either we get out here or we add on to it lower. So market's trying to get a bit of a double bottom here, and just need a little bit more up to be able to get out with a small profit. I mean, the pattern continues to happen, right? When you start to get strong bear bars, then you actually get bull bars. And then when you're getting bull bars, then you're, instead of getting good follow through and breakouts, then you're getting bear bars. So 3 bear bars, not the follow through that we were wanting. Obviously, we wanted to just go ahead and just go get our profit. But so much trading range price action today. Any breakouts we're still expecting to be bought, and pullbacks will be deep. So as an example, like the market went down here, but then look at this pullback. And the pullback was half of the day's range. So we can continue to expect, as the market goes down, for those pullbacks to be deep. So we have a bull bar, but it's not far enough away for me to want to buy above it. if I'm going to be scaling in, I want it to be at least the minimum scalp size away. And it's not even 2 points slower. So I think possible double bottom. I think it's a reasonable place to buy, but it's not low enough for me to be able to scale in. So I'll be waiting for a better setup. And so we're starting to pull back closer to our entry and our profit here. My concern now is we're coming right up against this moving average. I don't want this to actually start to convert into a trend down. Still, even if it starts moving down, I'm still expecting deep pullbacks like this and this. You can see we have this high and then lower highs here, lower high, and possibly this would be lower high again. So to avoid the risk of this just being the actually like being a high and what might be turned into bear trend, I'm going to try to get out with just a couple ticks.
Target filled.
All right, so I got out with one tick there. All right, so that's all I have for today. It's 1 o'clock. I'm going to call it for the day. Thank you for watching. I'll have the link for the Discord in the description. And on the Discord, that's a place you can get in contact with me. We're starting to have a community of traders and beginners that are wanting to learn how to trade. And I think that'll be a great resource for you to go and ask questions and, really start to just start elevating your trading. Yeah, if you have any questions, like I said, you can put in the comments on YouTube or go check out the Discord. And thank you guys for watching.